What's up everyone, and welcome to another Bitcoin market update. In these videos you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others, and also see where we are looking to buy and sell these crypto assets ourselves. So let's get into it here with Bitcoin on the weekly time frame. The first thing I want to point out is that cryptocurrency and the crypto markets in general are a game of liquidity. Now, liquidity is basically the concept of where the money is in the market. Where are the open orders on the order books that are on the exchanges? Well, most of the time, those orders, a majority of them, are going to be placed either under a key low or above a key high. So there's some stop losses above this key high here. There was some stop losses below this key low and this key low. And now you can see that we wicked down below these two lows here. And now we triggered those stop losses, meaning that those stop losses for the people that went long here and put their stop losses below here and here just got triggered right here. And so they automatically had to sell out of their positions because that's what their stop loss is doing. If you're going long, it's selling you out. And so that allows big players in the market to fill their positions without moving the price significantly. So when the stop losses here and here get triggered, there's a bunch of orders, meaning there's a bunch of money available for people to buy without moving the price a lot, because a lot of people are going to be selling there. So that allows big players to come in and scoop those positions up, and the price does not move very much. If big players did not come in right here, what would have happened was we would have went below this low and this low, and we would have just started dumping significantly with people automatically selling out their positions. But what happened instead was we wicked below it, but then as soon as we wicked below these two key lows, we barely went any further, and people bought the dip and we started increasing in price. So that's very bullish. Now this video is going to be kind of a mixed bag of bullish things and bearish things. And the reason is because that's what right now the charts are telling us. But liquidity, in my mind, is typically what drives the most, typically the most significant price factor when it comes to reading price action. So if you grab liquidity below 2 kilos like we just did, you may see a pretty significant rise in price over the next coming weeks. So if we're a bull, that's a very good sign on the weekly time frame. If on the weekly time frame in 4 days and 8 hours we close with something like this, a longer lower wick. If we close below these lows, that's not bullish. If we close with a short lower wick, that's not very bullish. So keep that in mind as we look for the weekly close in the coming days. Let's go down to the 3-day, and we're going to talk about the setup that we're currently seeing right now. So if we look at the 3-day time frame, what we're seeing right now is a couple things. One, we're seeing this long lower wick here of people buying the dip. So we wicked below this low as well as this low right here. So wicking below two lows is grabbing us liquidity, right? So we just talked about liquidity. So that's what we're doing here and here. The other thing to note here is the RSI. So if we look at the lows here, you can see this is the first low that we have. Second low is higher than this one, and then the third low is lower than both of those lows. But if we look at the RSI, that's not what the RSI is telling us. The RSI is telling us that this low is higher than those lows. So that is telling us that we are actually, if we end up going above this high of this 3-day candle in the next 3-day candle, that we're going to end up getting what's considered a bullish divergence. Now, a bullish divergence is where the drawdown in price is weaker than the previous drawdowns in price here and here. So this means that the selling pressure is weaker than it was here and here. That's what the bullish divergence is telling us. There's more buying pressure on this drawdown here than there was on this one and this one here. So that has price implications. And if we look at what that could end up doing, is we could see a rise in price over the next 3 days after this candle closes like this. Now, the question is, how high can that increase go? So the first thing that we're going to look for is the 2-day time frame, because if we go back to the reason we're going to the 2 days is because there's no resistance here to look at. There's no 3-day resistance zones, in my opinion, until we get to this 47K level. So let's go to the 2-day and look at what we got going on there. So if we look at the 2-day time frame, what we have is very similar to the 3-day. We have the makings of a bullish divergence here with a lower low and then a higher low. Now, if we look at this price action right here, we have something very interesting, and that's a bull trend before this drawdown. So we had a low, high, higher low, and then higher high with 2 candle closes above this key high right here. So let's zoom in on this a little bit. So this candlestick right here is the candlestick in question that we're looking at. This is a low. We came down, formed a low. We came up. We formed a high. We came down. We formed a low. We came up and formed a higher high. So this is our bull trend right here. Okay. So the thing with the bull trend is when you're looking at a bull trend, you are looking at this candlestick right here. You're looking for the this down candle, and the way we know it's a down candle is if we look at the open right here and the close, which is the C for this candlestick when we're on it, it's 37,412 and then 37,345. So this was the close was below the open, meaning this is a down candle. So this area right here where the price acted as resistance right here should have been support on a retest right here. But what happened was, instead of acting as a retest, we pushed right through it and closed this candlestick as well as this candlestick below this candle's low, which is at 35,821. So let's draw a box around this level. This is the key level that I'm keeping an eye on right now. So we'll see what we end up getting in the coming days, but this to me is very this is something that is very significant in my opinion. So if we look at the last time we got a pattern like this, we can see this is what we got. So this is a trade I also highlighted on this channel, which is right here. So we had the low, high, higher low, higher high, 2 candle closes above the key high, broke down below it, did not hold the support at all, and then on a retest of this level, which was this candlestick right here, when we looked at this candlestick, this is our resistance level right here. You can see we test it right here as well as right here, and we don't go above its high, and then we reject like all hell right here. So this trade, if you're looking at this from, all right, even if you were just taking it from the first test of this level, right here to here, that's a 10% trade. If you're taking it from its ultimate, high here down, that is, the 51. Oh, that's the 51% trade. So, that was the last time that we got a level like this, the one that we're seeing right here. So these levels, these types of trades, in my opinion, are very, they have a high likelihood of succeeding. So if we look at this from the perspective of the 2-day time frame, there's a couple things. One, we see that we have the low here that we're potentially setting with increasing bull volume, as well as a liquidity grab below this low and this low. But, the high up here, if we were to increase from the low to the high, that would be an increase of 43%. It's very unlikely that when you come down like this, they're going to come up right away and just go for a higher high and appreciate 44% off of a low without at least forming a lower high, higher low, and then higher high to change the trend back to the bull's favor. So what's more likely, in my opinion, is we'll come up, we'll hit this level, either here or the body of the candle here, and then we'll come down, if we are to be bullish, and this is indeed a liquidity grab that's significant, we will come down and form a higher low in comparison to this one, and then we'll come up and form a higher high. Now that is somewhat likely if we look at the monthly time frame. The monthly time frame right now is experiencing potential decreasing bear volume on this drawdown. And when you see decreasing bear volume, typically the next month is going to be bull volume. So if we do see bull volume, this right here will end up being our low, and then we'll end up coming up and forming a monthly lower high, I'm guessing, because of the move down here. It's likely we'll form a lower high, which will be probably that 47K level, somewhere in that 47K level, because just visually it looks like, roughly 50% of this, if we come up, it's going to be right around, 47K. It's going to be right around that level on the 3-day time frame. So on the shorter time frames, it is likely that we could see something like this, which I will draw now. We could see something like this, where we come up, we come into this gray level, we reject down, we form a higher low somewhere above this low, and then we come up and we go higher high. Maybe we even retest this zone as support on this, and then we go to this gray zone here, which will be our monthly our monthly resistance zone. So that is a potential scenario that we are seeing. So this level here, I know I talked about this in yesterday's video, and I'm going to go to the daily time frame and talk about why I'm not shorting that level. But the 2-day time frame is actually the reason. 2-day and 3-day is the reason why I'm not shorting that level. Because right now the 3-day, if we close a candlestick like this, somewhere like this, I am not going to want to go short on the open of the next candle. I would want to get a fill up here. And the reason for that is because this wick is very bullish. So even though on the daily time frame, if we go to the daily, we have this resistance level here that we talked about in yesterday's video that we're currently running into and kind of rejecting off of, it's still more significant. The 3-day time frame is a higher time frame, so it's more significant, holds more weight than the daily time frame. So on the 2-day time frame, this is the trade that I'm now currently scouting. I already opened the daily trade today and closed it for a small profit on the 4-hour time frame, which I'll talk about. So let's go to this. Let's just do this quick. So, because this video is already getting a bit long, but I want to talk about this because it's important. So what I'll probably end up doing is I'll probably end up putting my order up here at this pink line right here, which is around 37,345 on this exchange. Then what I'll do is I won't put my stop loss at the edge of the level. What I'll do is I'll probably put my stop loss above this key high up here. So let's do short position here, right around there. And then the target for this is going to be I don't know, probably somewhere in this range. So let's just call it like 30,000. 30,000 is a target. It's not a really good risk reward there, so I might even look for a lower time frame resistance level to put it. Maybe I'll just put it somewhere around here. I don't know. Basically then, hoping that this level gets hit, we reject off of it and we go down to form so we'll come up, form a lower high somewhere where my entry is, and then come down and form a higher low if we're bullish, or a lower low, which will even take this profit target down to about here. So this is, could end up, even if we did put our stop loss up here, could still end up being a very good trade here. But because of the monthly time frame, I do think it is probably a bit more likely that we come down and we form a higher low, because the monthly time frame closes in, like 8 days or something like that. So this is the trade I'm currently looking at. we go. All right, now let's go to the 4 hour. So if we look at the 4 hour time frame, we are running into, before we go to the 4 hour, we have the daily time frame. The daily time frame is this black candle right here, which you can see we wicked into right here. The low of this, and this is where I filled my order earlier, but then closed it for a small gain because the price action was not looking very good, in my opinion, because of the fact that the 2-day and 3-day time frame, which I already talked about. So I'm not looking, the thing is, this 2-day level is inside of that daily level still. So that daily level is still valid. So that's something to keep in mind. 4 hour time frame, we've already changed the trend to the bull's favor here. Low, high, higher low, higher high. Now we've come up and you can see we had this rejection here with this candle, but now we're retesting this gray zone, which is our support back here, resistance here, probably support here. So this is an SR flip zone. So this is really what we're dealing with right now in the 4 hour. 4 hour resistance is going, our next 4 hour resistance is going to be this, let's see, this candlestick right here, which is up here at about, well, it's June 20th, and it's this candlestick right here. So that's currently what we're dealing with. These longer upper wicks are not good in terms of bullish continuation, but because this is on the 4 hour time frame, and if we look at this from a 2-day and 3-day perspective, it still looks really good, then we need to, in my head, what I do is I override the 4 hour time frame with the 2-day, and I say 2 days still looks way more bullish. And it looks bullish, rather, not way more bullish. It looks bullish just in general. And so therefore I'm going to overpower the other 4 hour time frame. So that's currently what I'm seeing on Bitcoin right now. If you like this video, give it a like down below and subscribe for future educational content around crypto and blockchain technology. And if you haven't already, check out our global Leutheria Telegram channel that you can join for free using the link in the description below. This is where you can collaborate, learn, and grow with different Leutheria community members from around the world. You can talk about different crypto projects people are interested in, get different insights from people, learn a lot quicker than you would be able to as an individual, and also have some fun while doing it. So check that out, and until tomorrow, onward and upward.